The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Thursday edition. It is January the 21st, and a pleasure to be here Monday through Friday. Of course, tomorrow, Friday, we get into the technical stuff of the Chapman Wave. Meantime, thank you to the hosts from 7 o'clock this morning. I can't believe it's 7 o'clock this morning. Nico and Paige, that was the health program. Then comes along John Logan, fabulous program. Tom O'Brien and Tommy. Wow, that was Larry Pesavento, another great show, great analysis, and Tommy and Tom discussing oil, different aspects of the market. And now I'm coming in and I'm going to be discussing what pertains to the Chapman Wave methodology and why we are looking at a market that should be rallying from the retest yesterday of the lows of August the 24th. And of course, you've got shows. You've got the swim. You got the swimming lesson coming up straight after mine on options and discussion about markets and strategies that you can use. You got Dave White gave a webinar last night. I wasn't able to listen. I'm sure it was great, and discussing the rally that he was expecting, I'm sure. And then you've got Steve Rhodes, Mr. Candlestick expert, comes in. You've got Tom O'Brien back again, and being Thursday, Andy Hecht, if he's around. So full program, and let's get right to it. Dow's up 178 to 50,945. Actually, I'll do this. I'll do it at the same time as there. What I had said to subscribers, certainly yesterday there was an update that I gave at 2:15. It actually was about 2:12 Eastern time, and because there were a number of indicators that I was looking at, most importantly, at that point we hadn't tested the August low of 15,370. Wait, I can't remember now. Did we yes, we had. We had tested it and gone to 15,450, just above it. 60 points above, 70 points above. And what I decided was I had three very important indicators flashing. One was the Chapman Wave trend gauge. This is the index that Richard Arms has developed. I use it only for two reasons. One is I want to see highs and I want to see lows, and I've developed a technique that has I believe it's maybe about 97, 98% accuracy rate at this particular point. And it said that within 2 days, there should be a very strong rally in the futures, and very often it occurs overnight, that should impact the cash indices the next day. It's just good to know that that's around, because it says that at some point, even if you're wrong, there'll be some kind of a bounce to be able to get you out, if wrong, that is, if you wanted to go in on the long side. That was number one. Number two is, in the time, it was just 1 day late. Then the left side, right side price time match that I had in one way of using the methodology, and that was to the peak A top, A minus actually at 70,914 back in mid-November. And the other one was to go to the exact high of 17,977 in the Dow from the 3rd of November. And in that particular instance here at the bottom from the August 24th low, it would have been 2 days late. So looking at it in that perspective, what I wanted to see was the third aspect, and that was if there was a rally without the volatility index spiraling higher, and then a volume-related low bar. And I couldn't really tell whether there would be a volume low bar spike with the volatility index, the VIX index spike up and the price down. But as it stood, everything I looked at said it's either today or it's tomorrow. That's yesterday, Wednesday, or Thursday. We have to get a turn. If we don't get the turn, it is so negative that to be wrong, you then want to just be out the market for quite a while. But if you're right, there's a bounce on an oversold condition that hasn't triggered the exact prerequisites that I look for in the volatility index, but there was enough about it that there was so many days of 300 points down or more. Yesterday was actually almost 600 points. That the selling, anyone who wanted to sell must have sold. The Boston Globe had it on the front page. It was just today again. It was relentless, the news coming out. Everyone I spoke to actually this weekend, anyone who even wasn't in the stock market would say something about the market. So that said to me, risk reward, I could see if one bought, say, something like the Dow or the Dow Diamonds, you'd have maybe a 1.5 point potential decline, but you could have a 2.5 point rally. So the risk reward was good. That reward could increase, but a lot depends on making leg A, preferably today, not tomorrow. If it's tomorrow, that's fine, but I'd love to see it today, and that would mean that the Dow doesn't have to close there. It just has to spike about 15,989. So far, the high is 15,965. Hey, days young, anything can happen. Could still reverse because this is a very, very tricky market. So we went long at 212, 213 yesterday, and now we've got a little bit of a cushion. It's not enough. I'm not happy. It's not enough for me to say, hey, we're out the woods. We will not be out the woods until Monday or Tuesday comes along, and we haven't even gone back to the 15,800 level. To me, that would be very good. All right, and the stochastic is running a little bit. It's gone from, whoa, 10% to 12%. Wonderful. Now, I need all these technical indicators to come in line, and then that 200-period moving average, which is way up at 17,286. I can't even talk about that right now. I have to go first for the 9-period moving average. That's that maroon one right there at 16,198. All right, let's get on with our story. So we went long. We also shorted one of the sentiment indicators. That's working out very nicely right now, maybe 12%, 13% gain. But hey, these things can move at a moment's notice. They don't even have to give you notice. So let's go. So the E-mini right now is at up 16. The S&P cash is up 18. There's a divergence there that I've got to take note of. Here again, I want to see the E-mini by tonight go into a leg A above 1878.50. Okay, here we go. So the Dow is up 157 at 15,924. The S&P is up 17.5 at 1877. Let me go to the S&P and I'll give you parameters that we'll be looking for. The S&P made a trough F, if this is going to be, if the low isn't tested today, I don't think it will be, and that has started a leg A. Very nice. Okay, that's what I call in the Chapman wave. We'll talk about it tomorrow in the Technical Friday. This is called a gray A. Now, one of the things that I was looking for, and I did notice, actually I noticed it after we had gone long, is that the S&P 200-period exponential moving average hit exactly 1812.75 is the low right now. This is the 200-period exponential moving average. So is the price of the 200-period weekly exponential moving average. It went to 1812.29. So I was really happy that it bounced right off that level. So we'll be back in a moment. So we've got the comp index is up 39, gold is down 12, and we'll talk about bonds down 17 when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back. And so I got a great question, Larry. I want to know about the VIX index, and I'll discuss it right now. Let me just finish this here. You've got the bonds are down 20, 30 seconds at 159.27, 30 seconds. And you've got the dollar up 32 cents at 99.49. I'll explain what I was looking at. And I could never understand, ever since that August 24th spike to 53.29, I called it the China plunge, but I'll explain what I think was going on. There was a really quick buildup. Actually, the buildup was from the Friday before. Let me just go to the daily chart. The volatility index, folks, it's a sentiment indicator. I treat it real simply. I treat it just as numbers, and the numbers to me are very clear. In the mid-teens, you've got buying pressure. When you start to get to the high teens in the 18, 19 area, you've got selling pressure. When you get to up to between 19 and 22 is where you can expect triple-digit down days. When the price gets to above in the mid-20s, that suggests that not only are you going to have a selling pressure, but the selling pressure will probably continue at least for a little while. When you get to the 30s, that's where you can expect the spike is going to accelerate and reverse. Well, what happened on August the 24th, I'm looking at the daily. If you remember, there was a sudden spike on the 20th. The VIX went to 1924. The following day, this is above the 9-period exponential moving average. Then it went on the 21st, it went to 28.38. And then we had that weekend, if I can remember correctly, that was a Friday. Let me check it out. 21. Yeah, a Friday. So then you've got the 20th and 21st. And then overnight, there was just a lot of selling on Sunday night. And in the morning, You heard all these reports in the news media about China. China was, the index was collapsing, and there was a little bit of fear about our interest rates. Well, my contention was that that was a total aberration because the market opened down, the Dow opened down 500 points, and then there was a trigger by the computers that gave sell programs that accelerated it another 500 points. It was all so quick. I could never understand. It was the makeup, the characteristic of the buying pressure within the volatility index itself. I think that did it. It had nothing to do, if I had to use a gauge and talk about the fear factor in the public never really had a chance. They just read about it on Monday morning. Maybe a little bit on Sunday. So to me, it wasn't the buildup that we just had over the last many days going into this spike. The spike that we saw yesterday should essentially have taken the VIX. If the August the 24th high was 53.29, yesterday should have been 67, something like that. So to me, I've constantly called it an aberration. And it's not really a benchmark, it's the price. As someone once said to me, are you trying to tell me what I'm seeing is not what I'm seeing? What I'm saying is what you're seeing is absolutely correct. But the reason for the spike was not the intensity of selling pressure. Yeah, 1,000 points. Look what happened to the Dow. The Dow went down to 15,371. That 15,371 level was hit, and pow, we moved up. There, look at this, General Electric. You tell me how many people bought General Electric at $19.37. I do know someone who bought it at 22 that day, but those were very rare. It was so quick, unless in fact you had your order in. General Motors, nice sign today. It's up 77 cents at 28.76. So let me go back to the VIX now. So that is not the benchmark that I would use. It is the price that at some point we'll look back and say, oh, it looks like we're going to hit that August 24th high in the VIX, but that's just because it's there. This selling that we're looking at now speaks to me more to the point of the volatility index is telling me at 2630, having hit yesterday a high of 3209, type that in here, 32.09, 120.16. That tells me that there might be a lot of room to go for the volatility index to really scream into the high 30s, low 40s. I don't know if we're going to go back to the 53.29 level at any point. And that's telling me that the rally that we're looking at now, at least initially for my eye, says that it is a bottom, a tradable bottom, but it isn't the bottom. It might be a bottom, but not the bottom. And that essentially says to me that if the volatility index slides by tomorrow at 4 o'clock, if the volatility index is underneath for the first time in the daily chart, since we broke out back on the 31st of December, remember those two ugly days, the last two trading days of December? If the volatility closes underneath, I'll give you a number, underneath 25, a close under 25 tomorrow at 4 o'clock, that would say there is a good chance that we could continue higher for another week or two, and then we're going to have a real test of whether the strength is something that is more than just a tradable bottom or not. My eye says that if I'm looking at key stocks, General Electric being one, went down to the 200-period moving average yesterday, started another leg A up, but now the technicals are actually improving in the daily. The weekly makes me kind of nervous. It says, hey, a lot of work needs to be done to get the price to move to the high of 31.49 again, especially when the MACD and stochastic are so poor, and that monthly chart is still looking pretty darn good. So that's General Electric. If you look at IBM, of course, got smashed yesterday. Nice rebound today, up 1.45 at 123.32. I should have said 12345. That would be nice. Maybe in the next few seconds we'll get that. And it made a low yesterday, a round number low of 118. So it too says, tradable bottom maybe in IBM, just a tradable bottom. But here's the real thing. Look at Triple M. Triple M is coming off a low that was made at 134.64. It did not break the low of 134 round number of the 24th of August last year. So far, the pattern that we're looking at says a leg D. The monthly chart has got another week or so to go, and it still hasn't. We'll see if it's going to close under that major red line, that moving average, that long-term support moving average. So that's just a hint today that maybe we're getting a little bit of a rally in some key stocks, because UTX will be the next one, and it's up 93 cents at 85.75, and that has come off a low that was made. It went underneath the 85.50 low of wasn't September, August, it was September, the week of the 20. Excuse me, the week of the 25th, and it went under it. It hasn't closed below 85.50. Oh, it has. 85.47 last week. That makes this week really important. Uh-oh. Here we go with that need water. Yes. So look at this chart. You've got that U-shaped formation in the weekly. And most important is that if tomorrow, Friday, it closes above 85.50, that'll be a little bit of a hint to say UTX, United Technology, could rally a little bit further, maybe go for the 91s where the 9-period moving average is. I'll be right back. Dow's up 140, S&P's up 14. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 135, and we're going to go to Jim in Oldsmore, Florida. Jim, how are you?
Doing good. How are you today?
I'm okay.
I called the other day, and you gave me some wonderful advice. I appreciate it very much. And I was wondering, just for a trade, to like buy the diamonds for the today and tomorrow or through the weekend, would that be a good idea, or would you wait till it pull back a little bit from here?
I would buy it right this very second as we're talking at 158.87, and I'll tell you why. I know this might sound contradictory, and but I love the stumbles that we've had. I only love it because the Dow is up over 100 points today, and last night the futures were up very strongly, and they gave it all back. And then earlier this morning, I looked at I couldn't believe it, actually. I saw that the futures had been down, the Dow futures had been down about 180 points. And then I looked at the futures and I thought, okay, this is really important, because if we can resolve this with what I call the Chapman wave trend gauge, if we can resolve it by rallying and then having a couple of stumbles to get everybody really nervous about if they went long, they'd be looking stupid if the market tanked today, because, wow, that would be a real quick entry and exit. And yet, if they didn't step up yesterday and early this morning on the declines, then they would have to be, if the market closes up 250 points today, it could be up again very strongly, because there's also options expiration. So I'm not going to take too much time of yours, Jim. I'm going to say to you, you obviously have been involved in the market enough to know that you've got to put a stop in. So at 159.13, I think not even a 1% stop, about a 1.25 point stop right here from 159.15 at this point, because I think most of the selling has been done. I would recommend that, yes, you take a position, treat it as a trade, and let's deal with it. Maybe call me Tuesday. If we're still in the trade and Tuesday the market's still moving higher, then we can talk about how you can strategize to maybe take a little bit off in certain places. But in the meantime, I would recommend, yes, you start a position here. You have about a 1.25 point stop, or you could have it, think two positions. One will be a 1.50 stop, and the one will be a tighter 1 point stop. Treat it as it with a lot of respect. And then if it rallies, if the VIX keeps falling and the market keeps going higher with these sudden spurts to the upside, as more and more people have to cover their shorts, 161.80 is my target for a test of how long and how quickly we can get there and how long we will have to go on the upside if that's the case. So 161.80 is what I anticipate by, today's Thursday, by Monday or Tuesday. And if we can get there, that's going to be very important. So treat it as a trade first of all, and then when we come back and look at it, let's see what's happened. Okay?
Yeah, it sounds great. So 161.80 is your target, and you said put a stop in at $1.
So the stop, if you buy it right here at 158.80, 158.90, I'd put a stop in at start off with a stop at 157.20, and if it moves higher by 50 cents later in the day, you can have one stop where we just discussed and have another stop on part of your position 50 cents higher from your entry point.
Okay.
Good. I hope it
good.
works out for you. Thank you so much for calling.
Thank you. Bye.
Thank you. Bye. Let's go to Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you? Yeah, I think you really nailed it. I think everybody's nervous system is getting tested today, no doubt about it.
Yeah. We don't want to use terms like nailing it, because this is the stock market, and anything that gets nailed is your thoughts.
Right.
When you remember my expression, when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. So let's be careful. But yes, I think we might. Hopefully that's a good position to be in. So
yeah, no, I'm not saying you nailed it. Well, I just meant your philosophy about just being nervous. No.
Oh yeah, good. Okay, yeah, that's the part.
No. What I'm using for is as I mentioned the other day, the IWMs is what I'm using as a key indicator. And to me, if you look at the 30-minute, it still has not made a leg B in the
Okay, let me look at this.
in
Is
the,
the 5. Let me just change it to 30 minutes. Give me a second here. 30 minutes. There it is, 30 minutes. Okay, there's a lot of resistance, and you want to look at the IWM. So we're at the IWM, and this is with the Chapman wave notation, the Chapman wave projections, and 100.24 is one resistance, and 100.94 is another. Look at all the support levels in the 30-minute chart from the 94 area. So this is acting quite good right now. The stochastics at 81%. The MACD is moving higher very nicely. But at this point, the last sideways move in the IWM is saying, hey, I want to see 101. It's at 99.53. I want to see 100.94. I want to see 101.20 by this afternoon or tomorrow. To me, that would say, aha, now we've got the IWM. You see, the IWM right now is up 0.41%. The Dow is up 1.01.
Or at least make a leg B to 100. I think it's 100.24 or somewhere in that area.
Yeah. So what? Yeah, 129 would do it. Yes. So what we're looking at is the IWM is still lagging, together with the New York Stock Exchange. And those are very heavy. That we've got to respect that, and that's the reason why I'm saying that this is still early in. It's what I said to my subscribers this morning. This is part of a process, probably more an art of the process. So in looking at it, I've been talking about the different aspects that I was discussing yesterday for the entry at 215, 212. About that time, on the long side, actually it was quite a heavy position we took. And the reason is I was looking at least 3 key ingredients that I needed. I'm still not getting the one ingredient that is important right now, the VIX index. The VIX index is at, where is it? It's at 2610. I really want to see it in the 25s and going towards the low 25s. That's missing for me right now. I think we might get there. So this is what I'm looking at. The IWM is still a laggard. If all of a sudden money comes back in and the IWM on a percentage basis starts to be stronger than the Dow and the S&P, then I'm going to be saying, okay, now we've got more meat in the situation. Now we've got the soldiers are starting to move as quickly as the generals. In fact, even quicker. And that to me would be very good. You see the QQQ at this particular point is up only 0.83. So it's very interesting. I've been focusing on the Dow because I think the Dow, I love the makeup of the Dow at this particular, for the first time in years, I'm looking at the Dow and I'm saying it's closer to the XMI, the market, XMI is the major market index. And because of it, I feel there's a really good balance, that there's a balance between defensive. They've got high tech, they've got banks, they've got some oil. I think it's a terrific balance, and here it is leading. So to me, that's important. And I think that, can you hold on and we'll finish the thought?
I'm good. Okay. I just want to make sure we're on the same page. Thanks a lot, Basil.
I want to see IWM start to lead. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. I want to thank Ben for the call. Ben from Tallahassee, Florida. So the Facebook had a question there. When I look at Facebook for Jen J, yes, Facebook trading at 95.12 is up 77 cents. This is very interesting. This is made an F, and it looks like a trough F. That says this could be a deeper. It's been a deep correction, but it could be a nice rally, in fact, in Facebook. It was on my list, in fact, for today to look, but I decided to go with something from Investors Business Daily, which I read about. I looked at the chart, and I thought, if anything's going to move in this particular software area, this stock at least should have a good chance. So it's a much lower priced one, and it's also up. Let me just check to see. Facebook is up 0.69%, and the one I chose is up 1.27%. I just think it has, at least it has a story to it, and that's the reason why I liked it. And I do like the chart, otherwise I wouldn't have got it. We'll see what happens there. So looking at Facebook, the 9-period exponential moving average, see, it dipped underneath the 200-period moving average. Now, this is going to be very important. This is the first time it's gone under the 200-period moving average since the November smash to the round number 72 low, having been at 99 back in July. So that's a pretty big move. That's 25 points from 99. So that's a 25% correction. And now it's had from 110, it's gone down to what, 89 or something. So that is 20. So there you are. Now there's a 20% correction. So I'm looking at this and I'm saying, you know what, Facebook doesn't very often test the 200-period exponential moving average. Whenever it's gone close to it, back in May of 2015, it hit 76.79, and it climbed all the way from an up arrow buy signal to 99.24. There is a move from, it's a little slow, let me just, and then the last time it was very close was back in February. It went to 73.45 and then climbed to 86. I'm just trying to find when. Oh, there it is. Okay. So on the daily chart, let me squeeze this so that I can give an answer, a better answer. Look, on the daily chart, there's a gap, and that gap's never been filled. That gap is from one day's trading. This is back at 20. Anything happening there? Yeah. On the 24th of July of 2013, it's trading at 26.05. Next day, the low is 32, and then pop, it goes to, oh no, that was it. That was the gap. So the high was 26.53. The next day, the low is 32.75. So that gap below below 32 in the 31s has never been filled, and this has just been a spectacular ride. And every time it's gotten close to the 200-period moving average, it has a fabulous run to the upside. This is the first time that not only has it tested it, but it's been there for 5 sessions. 1, 2, 3, 4, 5th. This is the 5th session. And this 5th session is pushing away from the 200-period moving average. Most fund managers look at the 200 simple moving average, and that is at 92.69. 95.07 is the 200-period exponential moving average, and it's trading at 95.03. So I'm trading at 95.03. Why is that little? Yeah, no, that couldn't have been right. 90, sorry about that. 93.90 is the 200-period exponential moving average, and it's trading above that. I do like it. I think that this last decline changed the technicals to the point where I'm going to suggest it could have a bounce, but I would only treat it as a bounce. And if it goes higher and you're in it and you haven't been stopped out, that's fantastic. That's the way, that's what I'm hoping, and hope isn't part of the game. That's part of what I would like to think is going to happen. Having bought the Dow yesterday at, I can't remember the exact price, was it 15,000? Dow at 15,650. So now the Dow is at 15,924. So all you can do is you get your position, and then I have to wait for the technicals to start to improve. I also have a way of doing this now. I've been working on it for quite a long time, using no technicals, just my own Chapman wave methodology, trend lines, and a new technique that I've developed. And you can see that in this particular instance here, I've used just trend lines. I do not use the MACD. So I'm going to treat this as if I wasn't looking at the MACD, and I'm going to say, hey, it had a successful test of the 85.72 low of the 29th of August, because that was 85.72, and yesterday's low was 89.37. So far, you're making at least higher lows so far. So I'm looking at this and I'm saying, if Facebook is able to break above 96.72, that's the 9-period moving average, the real issue is that big gap down day, spike up and pull back at 100.58 on the 13th of January. Can it get there? And that's going to be the big test. 5 points that's a lot of points. Look, today with all this going on, Dow's up 170, S&P's up 17, and yet Facebook is only up 81 cents, up only 0.87. So it's not a leader in the group, but it is doing very nicely right now. So the answer, yes. If you're long, I would probably say, you know what, you got to give it a little bit of room. A stop under today's low of 92.62. It's a little bit more than I would like percentage-wise, but that's probably the safest bet. But my thinking is that the 200-period moving average at 94, that should be good enough if this is going to be a very strong close to the day. And I don't see why it shouldn't be a strong close to the day. Nobody even had a people did have a chance this morning to get in, but I bet on that slide to negative, they just said, oh, no, this is not for me. And now they don't want to chase. So if it gaps up tomorrow, they kind of stuck trying to get in safely. That is, you can get in if this, if the Dow's going back to all-time highs, you could get in anytime in the next whatever till it gets there. But if it is going to come back and do a retest at some point in late January or early February, that's something else. Let's go to Brent in California. Brent, how are you?
Doing well, Basil. Happy New Year to you.
And a happy New Year to you. You are looking at Denbury Resources, another one I've never heard of. I don't know where you find these things. You have a fantastic scanner.
I went ahead and yesterday I saw enough activity in a lot of different areas. Seemed to be somewhat of a washout to me.
Yes,
so
correct.
I stepped up and took a long position in this stock. I've watched it for a long time. I actually got under $1. I bought it. I think I'm in at 95 cents was my buy-in. And I went ahead and bought this. It's not options. I bought 1,000 shares of it.
So look, folks, I hope people are listening. Folks, what we're talking about is a stock, DNR. I don't know if anybody's even heard of Denbury Resources, and I'm not sure how you got it on your scan or however you got it, but Brent picked it up and he looked at it and he saw that there was a turn occurring after just continuous down moves, but it was greater than a 1-to-1 to the downside if you use that A to B equals C to D on the last retracement. Number two, this is a stock that was once at $40.32 back in June of 2008. Had a little bit of a decline to the low of yesterday of 0.86, that's 86 cents. And now what you've got is, and Brent called it a stock. In fact, it's really like an option right now because it's so low. But you still have to have respect, and you heard that Brent got in the 9.90s. It's at 123, and he still wants an analysis. That's the way you've got to look at these things, even if it's a very, very low-priced issue. You've got to have respect for your money. So I'll be back, and we'll talk to Brent about DNR when we get back down.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Oh, folks, we're back. So we've got Brent on the line, and we're looking at Denbury Resources trading at 123. If I'm correct, I've got a left side, right side price time match in the 120-minute chart. It sounds a little off the wall here, but if there's a left side, right side price time match, it should take until about between 12:30 and 1:30 to try to reach 129. That's number one. Number two is the support is at 114. Of course, these are big percentage moves that we're talking about. It's up 13% already. But 114 is the 9-period moving average support. But the 134 area is there's $1.34 is the area of the 9-period exponential moving average in the daily chart. The MACD shows a very nice positive divergence. Stochastic shows a good divergence, but I want to see the stochastic at 10% climb to 15% by Monday or Tuesday, because it's trying its best to get to the 129, 134 area. If it does that, what I think you've done is you've set in place a base that should take the chart at least 5 to 7 trading days before it comes back for a retest, and that retest at this point should not take out the low of today of 1.03. But if it does go to 129 later today, I would raise that base to about 108 to 112. So I think you're in at this is really a nice situation, but it is the first move in a long time to the upside, and you can't treat it. Look, the one that started back on the 21st of December, that looked like a great. Not only that, you had 1, 2, 3, 4 great candles, and the next thing you knew, the 172 low was taken out and went all the way down to yesterday's low of 0.86. So it's a great entry. I like the setup. As I say, I would love to see this stock start to move towards the high 120s later today. So it's building a base, and more buyers will come in. Great entry, Brent. I think you nailed this in terms of the entry point for the best risk reward. Now we have to let the stock do the job.
Absolutely. Thank you very much, Basil. You have a wonderful day. It was great talking to you again, and just have a great new year, okay?
Thank you. Same to you, and congrats. Great entry point. So, folks, let's do this, because we got you got your swimming lesson coming up. Stay tuned for that. Let me just quickly do this. We've got the Dow, and I'm going to give you a couple of this is what I'm looking at. The Dow's up 218. What we really want to see is for the Dow to get above 15,989.45. The moment it does that, I can finally put it in a leg A. You remember the S&P, SPX.X already did that. It's in leg A, what I call gray leg A. Why do I call it a gray leg A? Well, this is the technician's hour. I'll do tomorrow the Chapman Wave, a more detailed thing. But suffice to say that that cliff on the left side, like the Grand Canyon, trying to climb that precipice takes a lot of energy. So I call this, for 20 years, I've called this a retracement failure mode. What is it? It's only explanatory. It's not a derogatory term. It's saying you're starting a retracement towards the upside. At any point, it could fail. Why? Because you've got a lot of technicals to improve. You've got a lot of work to do. You haven't gone above the 1905 level in the S&P 9-period moving average. So it's retracing, and it can fail. But it's the pattern that's important. And you really want to see, let me go back to the Dow INDU. You really want to see a V-shaped recovery. They're the very best. And the higher you can go in this move, and then the higher you can make the base on any pullback in the next 3 days, and then leg B to the upside, that is really key. You can't just base it on one turnaround. We haven't really turned around in the Dow yet because we haven't made a new recovery high from yesterday's open. But most importantly, keep your eye on the VIX index. That VIX index is now at 25.51. Good, that's a nice sign. I want to see it close well under 25 by the end of the day. Folks, have a wonderful day, and stay tuned. Got great programming coming up. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.